Today, Arthur Hayes, co-founder of BitMEX, published a post that has sent shockwaves through the cryptocurrency industry. His message was simple but devastating. Tether, the largest stablecoin in the world with over $181 billion in circulation, could become theoretically insolvent if Bitcoin and gold drop by roughly 30%. Let's be clear about what Hayes is saying. According to Tether's own Q3 2025 attestation, the company has dramatically increased its exposure to volatile assets. It now holds approximately $9.9 billion in Bitcoin and $12.9 billion in precious metals. Combined, almost $23 billion in assets that can swing wildly in price. Hayes' exact words were, "A roughly 30% decline in the gold plus Bitcoin position would wipe out their equity, and then USDT would be in theory insolvent. Why does this matter? Because Tether operates with an extremely thin equity cushion, less than 4% of its total balance sheet." Corey Clipson of Swan Bitcoin calculates that Tether is running about 26 times leverage. A 4% loss across the entire portfolio, or a 16% drop in just the riskiest quarter, would completely erase the company's common equity. To be fair, the vast majority of reserves, about 75%, remain in cash, U.S. Treasury bills, and overnight repo agreements, assets that are considered among the safest in the world. Defenders, including Tran Hung, CEO of Euclid, point out that Tether successfully handled $25 billion in redemptions in only 20 days during the 2022 FTX crisis, one of the most severe stress tests in financial history. But the counter-argument is equally compelling. Accounting insolvency and liquidity are two different things. Even if Tether could technically meet redemptions in the short term, the moment its equity turns negative, trust can evaporate overnight. Large exchanges and institutional holders would almost certainly demand real-time, verifiable balance sheet data, something Tether has never provided. This is not the first time Tether has faced scrutiny. In 2021, it paid a $41 million fine to the CFTC for misleading statements about being 100% backed by US dollars. Today, S&P Global gives USDT its lowest possible stablecoin rating, a 5 out of 5 on the risk scale. We are now in a situation where the world's most important dollar bridge into crypto has deliberately taken on macro risk to protect its profit margins ahead of expected Fed rate cuts. Whether that bet pays off, or whether it becomes the trigger for the biggest depegging event in history, will depend on the price action of Bitcoin and gold over the coming months. The crypto market has never been more dependent on the solvency of a single private company than it is right now. If you found this analysis useful, please consider giving this video a like, sharing it with someone who holds USDT, and subscribing for regular, no-nonsense updates on the biggest risks in the space. Thank you for watching, and I'll see you in the next one.